this session, so I'm just quickly going to go over the, let's call it the house rules. So please, as you guys know, switch off your camera and mute your microphone. But guys, this is a facilitation session. It's not me presenting, it's explaining and discussing. So if you have a problem, please immediately unmute, ask a question. You can use the hand function as well. If you see that I don't, if you kind of figure out that I'm not seeing the hand, please unmute and ask. It must be an interactive session. I would really appreciate it. So then number 3, your student number in the chat section, please. As I've explained, this is a facilitation session, not a tutor session. It's here to explain, unpack, and then to identify the skills that you need to enter into the exam, and obviously give it your best, and let's see if we can get good marks. Number 5 is very important. We'd appreciate it if you guys can, it's obviously voluntary as I say there, but it will be to your best, to your advantage. If you can please send me your name and your the module code, your name and surname to that number. I would appreciate it, and I'll save it. I'll save it. I'll save it, and then if there's any communication or something that I need to distribute over the group, you guys will get it real time. And if we have to communicate any logistical arrangements in terms of classes that might cancel or move, or additional classes being arranged, you can also use that facility. Then one-on-one consultations, also the WhatsApp number can be used. There is query forms that will be launched in due course. That will be the preferred way to let me know that you have a problem, is by using the query form, or you can, for the time being, you can send me a WhatsApp to that number. Tell me what you are struggling with, and then we can arrange a session to unpack what needs to be unpacked, and see if you can better understand it afterwards. Then, as you guys know, please use the links to the meetings. Late coming and interruption to classes, not allowed. I've never had a problem with that. Thank you, guys. Then number 9, technical issues on the student side will not be addressed in this class. Technical issues referring to issues like, for instance, not being able to access the attendance register, meaning that I won't be the one assisting with that. If you have a Teams problem, or if you have any other similar technical problem, that's not what this class is addressing. Adele will gladly assist with that. Then, if you're not able to hear the session, the recordings will be made available. And as we've asked in the beginning, please sign the attendance register if you are able to do so, or comment your student number in the chat section. And then also, please use this session evaluation form. If you can complete that, it will obviously add value to the way we deliver this, and it's open for you to give opinions and make recommendations that we can implement. Are there any questions before I start? Any questions that you guys might have? 100%. Just want to get the right page up, then we'll start. Okay, guys, we will go to the study guide in a bit. So you guys can open so long your study guide at chapter 4, because that is where we are at the moment. But I first want to, and I will always do this in the beginning, just run through the basic ideas behind consolidations again, so that we can ensure that no one gets left behind. And I will focus on what counts the most marks in the exam. Okay, and then obviously if you have a question, please stop me and ask immediately. And for this session, please excuse my handwriting, but I find it much more convenient to explain and by drawing. So I hope you guys will. If you can't read, please shout. Okay, so let's look at consolidations. So just in basic, we have, say, company A. This is just a revision of the previous few classes. And we have company B. A acquires an interest in B of, say, 70%. What you must remember is that company B remains a company on its own, and company A remains a company on its own. But because we consolidate, there's a new company that forms for which there must be reporting done. So there's, if you look at the AFS, the annual financial statements, there remain 3. There's still one for A, there's still one for B, and then there's one for AB, the group. And this is what we're going to focus on. The main thing is we want to eliminate intergroup transactions. The effect that it has. Everybody happy? So what is an example of an intergroup transaction? I'm going to ask a few questions and just to see who is on what, just to get the interaction flowing. So don't get afraid if I ask, and please participate. Let's, Linda, can you answer me there? What would you say is in intergroup transaction?
Okay, do you mind just rephrasing the question? Sorry, I was not 100%
No problem.
focused.
So if I have an intergroup transaction, what do I refer to if I say intergroup? It means it's anything that happens between the companies that's in this bubble.
That's correct.
Correct. So any transaction between these two companies, what would be an example of an intergroup transaction?
The buying of shares in the company.
Okay, so that will be the on the very first day will be the investment.
Yeah. And then maybe buying
as in B. 100%.
And then maybe if company A or B buys stock from one of the from each other.
Okay, so we've got inventory. Patience, can you think of something? Ron? You guys, mics are mute, so if you answer, just remember that. Then that seems like it's only me and you in this meeting. Makatani? Tumeling, I'm not sure which name you use.
Yeah, Linda is fine. So other intercompany transactions with stock and then assets, if you report an asset, or am I going off the point?
No, you're 100% right. Let's talk about equipment. Equipment.
Oh, there's Ruana's responding now via the chat. Dividends paid to parent.
Dividends. 100%. So again, intergroup transactions, are anything that happens in this bubble that must go to the Fs. It will be included in A, it will be included in B, but it must be excluded in AB, because AB is one, we view it as one company. So company A can't make profits or losses in itself. AB can't make profits and losses in itself. Okay, moving on. So on date of acquisition, you buy shares. So obviously A purchase shares in B. We need to eliminate. So for A, it's an investment. And for B, it is equity. So what is most important in the exam? If we think about all of these items.
The journal entries.
%, journal entries. Okay, so what would be the, so on day one, so on the date of that we purchase, and we start with the Fs, for A, B, we need to eliminate
The intragroup transactions.
this intergroup transaction. Okay, so the first thing that we will do is we will say debit equity, credit investment. Assuming that that's the only equity that there is shares. And guys, always remember, it is extremely important that you always remember the accounting equation. If you think about assets, equity, liabilities, income, and expenses. And if this is the debit side and that's the credit side, assets increases on the debit side, decreases on the credit side. If you think you will forget that, please in the exam, write that down immediately. Everybody happy? So please remember to write that down. Okay, moving on. So let's draw a timeline. This being on date of acquisition. This being the current period. Financial year. And everything here is the since date of acquisition. Why is this important? Firstly, on date of acquisition, if this is the continuation of the timeline, nothing to that side should belong in the consolidation, because the group only exists for this period, not before. So it's extremely important to, when you think of the exam, to pay careful attention to dates. What dates do you need to pay attention to? You need to pay attention to the question, what the question wants. Make sure that you understand the question wants a specific year for you to do the consolidation. Make sure you know that date. Secondly, you need to understand, when was the company incorporated? The company that you purchased, when did it start? Because it's important. Because if you've worked through the first 3 chapters, you would have noticed that it mostly dealt with us acquiring an interest on the date that B
was incorporated.
Meaning that if I go back to this example, there is no arrow. There is no before. On the date that B was incorporated, we purchased B. So B was part of the group from the day it started. In other words, when we purchase it, there can only be shares. But if we purchased a company after date of incorporation, there's a possibility that your journal on that very first day will look something like this. Debit, share capital, debit, retained earnings, credit, investment. So these 2 journals relates to B, whereas this relates to A, because together we are forming, and the company AB, the group AB, can't have share capital in itself. It can't have an investment in itself. And we are eliminating retained earnings on date of acquisition because it is not ours in the first place. It was made before we joined. Okay, everybody happy with that?
Yes.
Okay, so let's quickly go to the study guide. And I said we will be focusing on chapter 4, which is purchasing of a wholly owned subsidiary after date of acquisition. Consolidation of a wholly owned subsidiary after date of acquisition. So not on date of acquisition, after date of acquisition. So if I can just toggle between these 2 screens, I'm now referring to a scenario where this period has now formed. Up until now, we've only dealt with this on date of acquisition. Now we are purchasing a wholly owned subsidiary after date of acquisition. So after this date, we are going to consolidate. we are going to consolidate somewhere in this section. Why is that important to, well, what is the big difference that's going to come in? Before we even look at the study guide and look at the examples, what is the thing that you must immediately think? What happened in the since period?
Transactions would have happened, so there would have been expenses and profits that was made.
Correct. There was profits and losses. And we need to consolidate that. Because every year, if you think about it, where does profits go to?
Retained in, earnings.
Retained earnings. So the group has got a retained earnings account. Let's quickly go back to the study guide. Just give me a minute. I want to see if I can just open it on my tablet. Guys, are there any questions? Is everybody still happy? I need to have an indication of what I'm explaining is actually assisting you guys. So I need to, if you can raise your hand, that the way I'm explaining is actually beneficial, it's benefiting you, because this is your facilitation session. Remember, I said I'm not the tutor. I am here to explain and make it easier for you so that you can identify what is wrong. So if you guys don't interact, then I'm just going to keep on explaining and following my approach, and you might lose out on this opportunity.
Yes, sir. We are still okay, I think.
Okay. But stop me immediately. If something doesn't make sense, it doesn't matter how stupid you think the question is. There isn't something as a stupid question. Because that is why these sessions are here. It's for you to pass this module. So you guys need to ask me questions, and even if it means I have to explain it over and over, that is what we will do.
Yes, sir.
So don't be afraid to ask a question. I'm just going to open the study guide on this side. We are on page 49. Okay. So the main thing that you guys need to focus in this study unit, if you work through the study unit, something that is now being introduced that hasn't been part of our explanations yet. We quickly touched on it. Linda would remember from last week. We are going to touch on goodwill. Goodwill arising on acquisition. I'll explain what that means now. Before we look at the study guide, let's quickly discuss that. What is goodwill? There's two things that you need to know about goodwill. Well, a lot of things, but something that is important for now. The main thing is goodwill is an asset. But it's a tricky asset. Because what's the definition of an asset? Definition of an asset is there must be control. So you must exercise control over it. There must be future economic benefit. But what is the main risk if we think from an audit perspective? What is the main risk of an asset?
Liquidity. Oh, no.
Yes, overstatement. Exactly that, because it is something that we can overstate. But let's explain what goodwill is first. So goodwill, firstly, is an asset. Another thing that you should know is that you can only purchase it can only be purchased. It can not be internally recognized. What does that mean? You can't go and determine, this company of mine is doing so great. I'm gonna say goodwill is 5 million. So the standards IFRS said internally generated goodwill will not be recognized. We can only purchase it. So, but we still haven't addressed what it is. The best way to address goodwill is if you have two companies, company A and company B. They both sell furniture. They both had the same capital injection in the start. They both have rather good management. On all fronts, they are similar. But company A is located closer to its target market, the population that supports it, company A, than company B. So if a shop is closer to you, if shop A is closer to you than shop B, to which shop will you go? This is a very simplistic explanation, but that's what you must think of if you think about goodwill. Is you will support the company that is most convenient.
Sorry, Charles, I just want to ask. So essentially, with goodwill, the two companies need to be in kind of like the same line of business.
For this example, yes.
Okay.
But you will see once I've explained, once I get to what goodwill is not really something that you can define. Goodwill is basically the will of a buyer to pay more for one company than he's prepared to pay for another company. Because if you think about it, generally, we are inclined to pay less for something. We want to pay less for something. So if you are willing to purchase company A and pay 3 million rand more than company B, IFRS now says, obviously there's a more intrinsic value connected to company A above company B. It can be good clientele, it can be well situated, it can be market share, it can be a lot of factors that makes company A more attractive to buyers than company B. So the moment that company A purchase company B, and that 80% or 100% that he purchased in company B is worth, say, 10,000. But company A pays 12,000. Then we say 2,000 is goodwill that needs to be recognized. Everybody happy with that?
Yes.
Yeah.
Okay, so make sure that you understand what goodwill means. Let's quickly go through the study guide. Again, guys, please stop me. The moment that you feel that I've jumped over your problem too quickly, stop me right there and we go back and we explain. Okay, let's quickly focus on the treatment of goodwill. Market value that is higher than the carrying value of the property, plant and equipment. Remember I said company A and company B, similar companies. They have same assets, but we are prepared to pay more for the one than for the other one. There's a market value connected. There we say goodwill. If you focus on that, this section, goodwill that a parent, company A, pays for when acquiring a subsidiary, company B, represents the parent's anticipation of future economic benefits. What did we say here? What's the definition of an asset? Control. Company A controls company B, and there must be future economic benefits. So when company A purchases company B and pays more for it than what its market value is, we are saying we need to recognize goodwill because company A, the purchaser, the buyer, clearly thinks there is more economic benefit still to flow from this purchase of company B. Okay. Again, we've discussed consolidation of wholly owned subsidiary after date of acquisition. What is important? We have to eliminate common items, eliminate intergroup transactions, and consolidate, add together remaining items.
Yeah.
Okay. You guys still with me?
Yes.
And tonight I'm going to introduce, thank you guys. I'm going to introduce you to the analysis of owner's equity. So this is a thing that confuses a lot of people, but it shouldn't. The analysis is actually there to assist. The analysis is there to help you understand what needs to go where, because we have now 3 distinct areas on our timeline. And that's on the date of acquisition, since date of acquisition to the beginning of the current year. So not the current year, the beginning of the current year, and then the current year. So here we're talking profits. Here we still refer to equity. And equity is in the sense of retained earnings, as well as other
Reserves. Oh, yes, like revaluation surpluses and stuff.
100%. Everybody's still happy. So in this year, we will talk about profits. But next year, that profits has now moved to equity, and we will deal with that year's profits. So the analysis is there to assist. Okay, but we will do that when we get there. Let's quickly look at this at example 1. And I'm going to do it in a way that you need to pay attention on how to do it in the exam. This is an easy example. So the purpose of the example is not to confuse you. It's to focus your attention on a specific concept, a specific principle. So please do all the examples in the study guide. They are not there to confuse you. They are deliberately there not to confuse you. It's because they would rather try and focus your attention on the principle that we are trying to communicate rather than to confuse. Okay. So when you are in the exam, I said dates is very important. But how you tackle a question is you always go to the required first. Secondly, you take note of your time. And read carefully. Pay attention to what they want and for when they want it. Because we are looking at dates. Everybody happy?
Yeah.
So always pay attention to what is required. Go to the required first. Why? Because otherwise, and apply this to your other subjects as well, especially management accounting, those subjects, go to the required. Read what they want, because the moment that you first read what the examiner wants you to do, you will obviously read the given information with a more focused mind, because you will read it to find the answer and not just read it so that you can go in and go out. You're not going to pay attention. It's probably going to confuse you. So immediately go to the required, see what they want, take note of your time for this question, because the worst thing that you can do in the exam is go over your time into a next question's time. That is a recipe for failure, guaranteed. And then you read what they want and for when they want it. So let's do that. Suppose you have to draft the consolidated statement of profit and loss. So they don't want anything else for that part. The profit and loss, and also the consolidated statement of changes in equity and the consolidated statement of financial position. So they want all three the financial statements. For when? 31 December 2006. Okay. So we said when we did our question, our example, when we went through the information, we said it's important to take note of your dates. They want it for 31 December. So 31/12/2006. That's the date they want. Now we need to go find out, when did we get this company? When did this transaction happen? When did we acquire our shareholding in this company?
1 January 2006.
So we acquired it in the beginning of the current year. So we acquired this at the beginning of the current year. Okay. The next thing that is important, although we already know from this learning unit that it's a wholly owned subsidiary, still apply your mind as to what you will do in the exam. You need to determine the percentage holding. How much does A have in B? What is the shareholding? We know it's 100, but let's check it and see how we would determine that. Let's look at the share capital. B has got 80,000 shares for 80,000 Rand. So it means it's 1 Rand per share. Let's go to A Limited's investment in B. There's the investment. We paid 124,000. So we paid 124,000 for shares of 80,000. So that's how you determine, hey?
No, so yeah, sorry, carry on.
No problem.
Sorry, Charles, please can you just repeat that part again?
100%. Okay, so I'm going to start again. Because I'm not sure which part, but so fast forward me where you think I'm explaining. So we need to determine the shareholding because we want to determine if A really controls B and by what percentage. So
Okay.
let's pause there for a moment. We need to determine in the subsidiary. So let's assume company A purchased company B. Company B has got issued share capital of 100,000 Rand, and we say that is 100,000 shares. So the par value of the shares is 1 Rand per share. And always make sure that you refer to issued share capital. Remember, a company can have authorized share capital and issued share capital. Authorized share capital is only the shares that it's allowed, the maximum number of shares that it's allowed to issue to the public. Where issued share capital is what is already issued to the public. So A decides he wants to purchase company A, purchase 80,000. In B and pays 95,000 for it. So we need to determine the shareholding. So 80,000 shares versus 100 shares. So this is 80% shareholding. So it is enough, it exceeds 50%. So we have a group. So we need to consider, well, not consider, we would be required to consolidate. But we must also take into account that there is a non-controlling shareholders that also holds 20%. All that means is that 20% of the profits, 20% of all the reserves and all of that will go to one line item under our reserves for the group. And that line item's name is non-controlling shareholders. I know I've explained a bit more than the content of that question, but just so that you can already open your mind to what is next in the next few chapters. Any questions on what I've just explained on this page? It is fundamental that you understand what I've just explained. Everybody happy? Okay.
Yeah.
So again, on this one, 80,000 shares, we paid 124,000 for it. we purchased the whole 80. A owns B 100%. So here's the important part. They say A Limited acquired its interest in B Limited on the 1st of Jan, so in the current year. B Limited's retained earnings amounted to 40,000 at the time. So at date of acquisition, it amounted to 44,000. Assume that the carrying amount of the assets and liabilities of B Limited is equal to the fair value thereof at the date of acquisition. Okay, so no revalue. Hey?
Yeah, can you just explain that sentence, the one from assume? Like, what are they actually saying?
You need to consider whether there needs to be revaluation of assets and liabilities, because some of the questions later on will say that assets are currently being undervalued by B Limited. Then just before you start your pro forma journal entries for the consolidation, you will revalue assets to the correct market value.
Okay.
So that basically tells us that we don't have to do that, because we assume that all assets and liabilities are equal to the market value, the fair value.
Okay.
Okay, so let's do our. So if we look at our analysis, of the shareholding in B, we will always have a column that says at. That's at date of acquisition. Then we will have since, current, and non-controlling. Another one in the example, it looks a bit different. I'm just giving the full one that we will be using at the end. Okay, so at date of acquisition, we bought two things. We bought share capital, and we bought
Retained earnings.
okay. $80,000 and 44,000. Since it's 100% shareholding, there's no need to have a second column for the controlling part. So if we add these two together, what is the value? Everybody happy?
Yes.
Okay. And now we need to bring in the investment. Which is the consideration paid. How much do we pay for this investment? 124. Are there any goodwill? 0 at this stage. What will be our journals?
Debit share capital. Debit retained earnings. credit investment in, is it B or in B? And was there Goodwill?
There was no goodwill in this example.
No.
So I have a question here that's asked, so it means if you're not given the cost of the shares acquired, we use the amount of assets. Okay, firstly, you will always be given the amount or an easy way to calculate it. But in this case, if they obviously gave you the assets or the net asset value, that would have been the fair value because they say we assume that it's equal. But don't go on that. They won't ask it that complicated in this module. So, but yeah, good question. So share capital, 80,000. Retained earnings, 44,000. And the investment, 124,000. Everybody's still happy?
Yeah.
Yes.
Guys, and from there on, remember what that previous part said. You eliminate common items, you eliminate intergroup transactions, and then you consolidate it. You consolidate all remaining items. So if we look at property, plant, and equipment, the information is silent on anything that might be common or intergroup between those two. So in your consolidated financial statements, your statement of financial position, that will be a plus. We'll add that together. 124 would now be eliminated. That journal eliminated it. Trade and other receivables, you add together.
There's no note on it.
Share capital, only the 100,000, the 80 has been eliminated. What is important here? Remember the dates. We've got retained earnings. There is 60,000. But they said on date of acquisition, the retained earnings was 44,000. So that means if I have to go back to this timetable, it was 44,000 on that date. And since then, it's made how much?
What is it? 60 minus 44. Oh, where's the math?
16,000.
Yeah.
Am I right with the 16,000? So since then, profit was made of 16,000. Because where do we take profit at the end of the day? We take it to retained earnings. And here they give the profit before tax. And remember, 100% shareholding, which only means no non-controlling Everybody happy?
Yes.
Okay. Let's move on. Okay, so here's the statement of changes in equity. We need that for opening balances. If we look at B, so here's all B stuff. the question said, in the beginning of the year, retained earnings was 44. Exam technique. In the exam, they might not tell you either this part, they might not tell you, or they might leave out this, because you should have known that it is obviously the same. Because it's at the same date of acquisition. Everybody happy? Okay. Let's look at the statement of the analysis. Remember I said this one will look a bit different. They bring in the total column. You can have an at because I just left it out because of the 100% shareholding. If NCI was applicable, obviously here you will have your total. Here you will have your 80%. And here you will have your 20% as per this example of mine. So that's what your analysis would have looked like. We'll get back to that example now. So it goes to the at date of acquisition. There's no purchase difference. So there's no goodwill or bargain purchase. If we pay less than the market value or the fair value of the shares, it means we acquired that investment at a bargain. Okay, bargain purchase. Then we move to the since date of acquisition. Current year profit, we calculate it as 16,000. And we take it to the since column. If the 80-20 was applicable, 80% would have gone there of that amount and 20% would have gone there. This column would always be 100%. Everybody happy?
Just a quick question. The 16,000, is it is it part of the retained earnings?
Not at this stage. It is going to retained earnings because remember, we are now busy with the current year. But to explain what I mean, let's use that exact example. Okay, and let's now go to next year.
But how did we work? Sorry, how did we work out the 16,000?
Yes, that's what I'm going to explain now.
Oh, okay, thanks.
So at date of acquisition, so this is on the 1st of the 1st, 2006. Retained earnings was 44. Everyone still happy?
Yes.
Then we moved along and the question now asks us to do 2010. So since this date to the beginning of the current year, the 1st of the 1st, 2010, the balance is 60,000. Meaning, over the years from this date, Where's my, choose a different color. So from here to there, I've made 16,000 rands worth of profit. That is retained earnings. The amount that I make here, say for instance, the question says in the current year, 2010, we made 3,000 rand. That is current year profit. So do you see what I'm trying to explain? Do you see that the 16,000, as per the question, is currently here? Because we are dealing with the current year. We are dealing with 2006. The moment that we move into the future, that 16,000 goes into retained earnings. If we are going to do next year, 2011, this profit will then also fall into retained earnings. Because retained earnings is the accumulation of prior year profits. So if we now have to do the same example, we will have at date, we will have share capital of 80,000. We will have retained earnings of 44, which gave, if we say the purchase price, 124, or let's say the investment, let's change it. The investment's 124, there's zero difference, so no goodwill or anything. So that's at date. Then we create another section that we say since date of acquisition to beginning current year. That's the next heading. Now it is retained earnings of 16,000, whereas in the question, because it's the current year in the question, it is profit, not retained earnings. Next year, it will be retained earnings. 16,000, and then we will have another heading for current year, profit of, as per my example that I'm using here.
Oh, yes. Now I understand.
Makes sense now?
Now it makes sense. Thank you so much.
No problem. So as per the question, because we are still in the current year, it is profit. If the question should have continued and asked us to do the consolidation for 2007, then 2007's profit would have been here, and that 16,000 would have moved up to the since date of acquisition to beginning current year. Okay, let's quickly look at the journals, because ultimately the journals are the more important part. Okay. Pro forma consolidation journals, main thing, elimination of owner's equity at date of acquisition. Exam technique. Guys, you must keep like a little book by your side where every time I say exam technique, those are the things that you need to make notes of, and the evening before your exam. You don't do tons of questions, because by then you should have done tons of questions already. So that evening, you just go over that book and you read exam techniques that you must focus on to get maximum marks. In your journals, always make sure, because what is the purpose of these journals? We are eliminating common items. We are eliminating intergroup transactions. Tell them in which books we need to pass those journals. It is the share capital of B. It is the retained earnings of B. It is the investment in B, but in A's books, because A has got the investment in B. Everybody happy?
Yes.
Yes.
So very important if you to understand that. And then this part isn't always required, but remember what I said earlier, exam technique, read the required. If the required part says journal narrations are required, then you have to explain. And an explanation is very short and concise. Just explain what you did, very short. And there's no specific way it must be said. As long as you can explain why did you do that. And that was to eliminate the owner's equity and the investment. Everybody happy? Assets, remember what I said in the beginning when we went through the information, we added everything together except for the investment. Was eliminated. The share capital, only A. B was eliminated. Everybody happy?
Yes.
Guys, that is it for me for tonight. I'm going to stay on, and now's your time to ask questions. I'm going to go back to my explanation.
Wait, sorry, Charles, can I just
Yes.
ask again? You
Yes.
said that when you're working with the pot with owner's equity, we only take into account the share capital because we eliminated everything else.
Just repeat your question.
If you go back to, yeah. You said we only consider the share capital for the pot of the equity.
Yeah.
I don't know if you understand what I'm trying to ask, because you said with the assets we add everything except for investments.
Yes. So investments are out, and then obviously retained earnings can only be, so equity. So just remember, share capital, this entire part is equity, which must be eliminated. If we go back to the beginning of the question, here's A. So A was 96 plus 24. So it's 120 plus only the part of retained earnings of the pair of the subsidiary, since we had the shareholding. Meaning, if I go back to my explanation, the 44,000 is not part. They made that 44 without us being in the picture. But since we got the shareholding, they've made 16,000.
Ah, okay.
So only the share, that's what, remember when I did this, where did I do that? This arrow. That's why that arrow is so important. Only after our date that we acquired the interest, that we acquired the shareholding, can we start accumulating the profits.
Okay.
So on that day, we eliminate retained earnings, but that's the only time we eliminate it From then on, we add to it.
Okay.
So in the current year, if we go to the answer, retained earnings will be A plus profits in B since acquisition.
Because the 44 was already eliminated in that first journal.
100%. So here it was the 120,000 that belonged to A, and then B's since date of acquisition profits of 136. Everybody happy?
Yes, thank you so much.
Guys, please remember before I wait for more questions, please remember to click on the link to the attendance register, and please leave your student number in the comment section, and to please complete the evaluation form. And then for those that didn't get my my number in the beginning, please remember to send me your WhatsApp with your student number and the module code, and I'll add you to the WhatsApp group. Guys, another floor is open for questions.
Regarding the WhatsApp group, can we add all the modules that we registered, or only for financial accounting?
You can only for financial accounting. So if you have any of these, if you have any of these modules,
So there's also one for FAC2601, I presume then.
yeah. So AUE 3701, 3702, FAC 2601, 2602, 3703.
And
then
when? Sorry.
and then we also start with MAC 2601 and 3701 together, and MAC 2602 and 3702.
Okay, and I can only include it in one WhatsApp, the message. Is it fine like that? Can I just send my student number and add all the codes in one message?
As long as I have the codes, then I can add you 100%.
Thank you so much.
No
Sorry,
problem. Yes.
Just a quick one. So is there also like an accounting skills class for 2601?
Yes.
When does that happen?
2601. 2601 is on Monday, if I'm not mistaken.
I had no idea. I only knew of the tutorial classes.
Okay, so if you guys are registered for 2601, and you didn't get them the email, because that's how we communicate. It's over Adele. Adele sends all the invitations over email. So please check all your emails, and that you check the correct email account. If you didn't receive it, please leave in the comment section a note saying, please include me in the next class.
So should I leave that in this group, or?
You can leave it in this group. Or if you want, send it in the WhatsApp.
Okay.
Because
I'll
if you're part of that WhatsApp, on that day, I will in any case from my side in the WhatsApp send out a general message saying, guys, please remember class tonight.
Okay, perfect.
So you will always know. And if in the same, obviously, if I have to cancel a class, Adele will send it over email and I will send it over WhatsApp. So you will always be first to know directly from me. And I promise you, I'll be the first person to know if I won't be able to make it.
Okay. Thank you so much.
No problem.
Sorry, Charles, Adele
Hi, Adele.
again. Just so the students know that your sessions are being recorded and they can watch the recordings, they should be available about 48 hours after your session. So if they go onto through the My UNISA site, onto the Western Cape, into the Numeracy Center, then they will find the schedule with all the recordings. Then they can just click on the link for your module and they can find the recordings on YouTube.
100%. Yeah, Adele, just please tell the students that will cost them double, though, if they listen to the recording. Whereas the class is whereas the class is free. I'm just joking.
That's why I'm not hasty to post the recordings, Charles. I wait as long as I can so that we can get them into the sessions.
100%.
Okay. Are there any of these students maybe doing the MAC modules, Charles?
Sorry, Adele, you broke up there.
Are there any of these students doing the MAC modules?
Yes, I am doing MAC 2601 and 2602. Hence, I was asking if I can add all the modules on the same message.
Yes.
Okay. Now remember, on Saturday, 2601 and 3701 are Charles is having a session from 2 to 3.
2 to 3. Okay. Yes. Saturday, okay.
Yes. Did you not get the email for that?
No, I haven't got any email.
That's very weird. Are you registered for that module this semester?
Yes, I have.
But then you should have received the. Just post your student number for me and in the chat section and tell me I have not received the MAC 2601 email so that I can add you.
Okay, let me do that.
Please, now. I'm going to send that email to you now.
Okay. Thank you.
I'll have the link. Okay.
Patience, if you scroll up in the chat right at the beginning, you will find there's a message from Adele saying the attendance, giving the attendance register link as well as the evaluation form. So guys, please just click on that link. If it doesn't open, just leave your student number because we will use that in the chat as attendance as well. And then please complete the evaluation form. I would really appreciate it.
Okay.
All right. See you Saturday. Are there any other students doing the MAC modules?
No.
Okay, 100%. Guys, so please remember to send me the WhatsApp and then I'll add you to the relevant group. But please remember to include the module code. Otherwise, I won't know to what group to add you.
Okay.
Okay. And what's for next week?
Say again?
What are the modules that we must go over for next week?
In 2602?
Yeah.
It'll be chapter 5 and 6.
Okay.
Guys, if there's no other questions, I'm concluding this session to move over to a next session.
Okay, thank you so much.
Thank you, guys. You've been a lovely group. Thanks for the participation. I really appreciate it.
Thanks,
Thank
Charles.
you.
Do come back next week, eh? We're going to give we're having ice creams dished out next week.
And it's half
Sounds
price.
like bribery. Thank
Right.
you, Charles.
Thanks,
Bye.
everyone. Enjoy your evening.
You too.
Okay. Thanks,
Bye.
Adele.
Bye-bye.
Okay. Bye.
Bye.